What's going on? I took one trade today. Today's Tuesday, the 27th, and we just had Memorial Day yesterday, so I wasn't sure what to expect, but I just wanted to kind of go over my trade today. One contract NQ, but on the higher time frames, again, I'm just getting back into things. I haven't traded a lot, but what I'm looking at here is, I'm seeing a little bit of like kind of a forming head and shoulders here. So you've got a shoulder, the head, or inverse, reverse head and shoulders, and then the potential for one to form here. But as I zoomed in on the higher time frames, or on the lower time frames, I saw something very interesting. It looked essentially like another head and shoulders here. So I would rather, since I'm not doing any like long-term swings right now, I'd rather just focus on kind of the short-term stuff, just trying to focus on what price action is going to show up that day and not worry about, the next little bit. And so again, head and shoulders pattern here on the 15 minute. So I was also looking for longs, just really looking at this price action here. We had taken liquidity here. We found some support on the 27th of May. Pretty much at 21,150. And I ended up taking the trade today on the 5 minute. And this is right after the open. But this is basically what I was looking at here today. Basically from 11:45 yesterday to 3:50 a.m. I had this leg. I basically measured this leg with a Fibonacci retracement, and I was just kind of watching this kind of slow dribble downward. I figured we'd find some sort of retracement, find a decent area in discount here that people would buy it up. I ended up getting a really great entry here. I have two SMAs on my chart here. I have the 200 SMA and I have the 20 SMA here in blue. I wasn't necessarily looking at them, really just using them for reference for today, but what I was anticipating was having some sort of like deep retracement today after this leg. Some sort of deep retracement. I prefer anything deeper than 0.618. That's fantastic. And then I just started to watch the candles, how they would form, because the first, 925, we got this significant red candle here right before the open. I was just going to let this play out. I wanted to see how far we were going to go down, what we were going to look for, and what it was going to look like. Again, this is the 5 minutes, so I think each candle holds a little bit more weight, obviously. And then at the 935 candle, I really liked this candle here. It had a nice big wick. It dipped into probably close to 75% retracement, 80% retracement on this leg here. And then I actually entered on the very next candle. So once this one closed, I felt pretty confident. I made the trade based off of where I could put my risk and not necessarily potential targets. On this particular trade, I liked the wick here. We couldn't find buyers in this wick area. We couldn't find enough sellers to sustain this area right here. So in my mind, when I'm entering long, what I'm looking for is a risk placement, like where I think that should be a safe place to put my stop loss, to where I shouldn't get stopped, considering it's NQ. And if it actually is taking off, then I shouldn't get stopped. And so I ended up putting my stop right here because we had a large wick here. We had another wick here. So I put my stop right below this low here, which ended up being, I want to say, around $250 in risk. I was trading one NQ contract, ended up being about $250 in risk. And then my target was like way up here at the beginning of this move, which I think was like long term. I think it was a great play, pretty clear area that for liquidity to target. Obviously, this would have been even better, but this is where I had it originally. And what I started to do was, as these candles finished, as we started to not one candle finished, because I actually the 940 candle finished, and I closed on the 945 candle. But as this one closed, I felt good, and I started to kind of just sneak my stop loss up, trailing it behind me. I'm getting close to passing this evaluation, and I didn't really want to take on any additional risk if I don't have to. So I just slowly started kind of punching my stop loss up with the trade, and it was basically this single candle. As this candle was moving, this one had already completed. As this one kept moving, I just kept inching up the stop loss with it. I ended up at the end of the trade, I ended up putting the trade right at like $500 stop loss, like in profit. And it was doing good. It was, moving 5, 6, 7, 800s. And then it just took a very sharp dip down, probably to take people out like myself that had my stop loss trailing. But I ended up getting the trade for about $500. So that felt good. I don't want to over analyze what I could have done. I think considering the higher time frame stuff, this most recent leg of price action and the very deep retracement into discount, I think it was a pretty good location. I still felt pretty good about it. Of course, I could have held, and that would have been fantastic. In a perfect world, I could have held to the moon, essentially. But what I'm looking for here, again, I'm close to completing this eval, so I'm just looking for pretty much base hits, $200, $300, $400, $500 trades. If I can just get in, get a simple trade, and get out, then that's what I'm looking for right now. So, not the prettiest trade, but again, I haven't traded in several months, so I'm still ironing out some things, but feeling good. And long term, the reason I do have these SMAs here, the 20 and the 200, is I am using them for, I'm trying out a strategy to see, it's a very simple strategy, but I'm using them to just at a glance get an idea of where the price is trending on the 5-minute time frame. I think the 200 SMA and the 20 SMA can work on higher time frames, but on the 5-minute, I think it works really well, and it kind of gives a pretty decent, a decent quick glance at the short-term trend. So I'm going to keep an eye on that. But for now, took a simple trade based off of a deep fib retracement from this previous leg here. Deeply retraced. We took liquidity from the pre-market session here at 9 o'clock. Took liquidity, found some support from the previous roughly 21,200. This support resistance through here. So the deep retracement, taking liquidity, finding support in the 21,200 region, and then I zoomed in, found myself some bullish candles, got in, kept my risk, what I felt was a decently affordable amount of risk, and turned out to be about a 2-to-1 risk to reward actualized ratio. So that's what I got for you guys this time, and I'll see you guys next time. Peace.